Okay friends, now coming towards the practical question of straight line value method. While reading the question, we will get to know whether it was linked with the method of recording of depreciation, where we record the depreciation where basically the depreciation is charged to the asset account, or whether the depreciation is charged to the provision of depreciation account. Okay, so now first of all let us read the question. The question states that Ram and brothers purchased a machinery on 1st July 2015 at the cost of rupees 1,40,000 and spent rupees 10,000 on its installation. Okay, with this the statement is closed. So we can say that in the given question, our cost, or you can say the original cost, is rupees 1,40,000 plus rupees 10,000, which is your rupees 1,50,000, right? Okay. Apart from that, the firm estimates the life of the machinery was 8 years and the scrap value at the end will be rupees 30,000. It means that as if in the question the other information, then the depreciation rate or the depreciation amount is given to you. We are required to compute the rate of the depreciation as well as the amount of the depreciation. So first of all, let us now compute the amount of depreciation. So the annual depreciation will be equals to, okay, first of all we are required to know that which method here is to be used. The firm decided to charge depreciation at original cost every year. It means that the depreciation is required to be computed by using the formula of straight line method, right? So what was the formula? It was your cost minus scrap value divided by useful life. Here your cost is rupees 1,50,000 minus scrap value is rupees 30,000 and your useful life is 8 years. So what will be the value? It is your 1,20,000 divided by 8. So your depreciation comes to you is your 15%. Now if in case we are required to find out the rate of depreciation, what will be the rate of depreciation? It will be your annual depreciation divided by cost into 100. So what is your annual depreciation? It is your rupees 15,000 divided by your cost 1,50,000 and you're multiplying it with rupees with 100. Okay, so what will you get? It is your 10%. So it means your rate of depreciation is computed as your 10% and the amount is rupees 15,000. Okay, so the book are closed on 31st December. See, okay, one important thing here is to be noted here is your question will state either your depreciation account will be closed on 31st December, which can also be called as your calendar year. Apart from that, your next question can state that it will be closed on 31st March. This is your financial year. The year which close with the 31st March, that is your 1st April to 31st March is your financial year. And apart from that, in case your year starts with 1st January and end up with 31st March, the year will be called as calendar year. It might be possible that in the question you will be given that you are required to close the book as per the calendar year. So in that case also you are required to make the depreciation account with the ending date of 31st December every year. Show the machinery account and the depreciation account for 3 years. Okay, so as if here you are required to make the machinery account. It means you are required to make the asset account. So the depreciation is to be charged as per the depreciation account. Okay, So this was all about the question. Now let us make the machinery account as well as the depreciation account. Before that, please go through with the question once again. So and mark the important concept. Please mark the important points. Please write down the important points so that while solving the question, you will get to know why and how we are doing that. Okay. Okay. So first of all, we are here. I have made the format for the asset account, and here in this question, our asset is the machinery. So we will write down machinery account, machinery account. Here your debit and here your credit. On the debit side, it is your date, particulars, amount. Date, particulars and amount. Okay. Okay. Now starting the question with the first line where it was said that the Ram and brother purchased the machinery for costing rupees 1,40,000 and including spent 10,000 at its installation. It means basically he have purchased the machinery for rupees 1,50,000. So it was your year 2015. Your date was July 1st. Okay, so we will write down here to bank 1,40,000 in plus 10,000 in bracket, and the total is your rupees 1,50,000, right? Okay. Apart from that, coming towards the credit side, it will be your 2015. Here we are discussing about our first year, and as if here it was given that we are required to compute depreciation, we are required to close the book on 31st December. So we will compute the depreciation also on the last date, which is by depreciation account, which will be our 1,50,000 into 10%. But here, as if your machinery was purchased on 1st July, so we can't say that it is to be computed annually, right? So we are required to compute it monthly. So how many months it will be? July, August, September, October, November and December. It will be your 6 months, right? So 6 by 12, and the total will be your rupees 7,500. This will be your depreciation amount. Apart from that, our next step is on December 31st by balance CD. First of all, for that we are required to total both the side rupees 1,50,000 here and rupees 1,50,000 here. What is the difference? The difference is of rupees 1,42,500, and it is your balance CD which is required to transfer on the first date of the next year. That is your 2 balance BD amount to rupees 1,42,500, right? On which date? Your January 1st, 2016. It means your second year is started. 2016. On the last date, we are required to calculate the depreciation on December 31st. Our depreciation will be by depreciation, and it was as if here we are required to calculate from 1st January to 31st December. It means for complete 12 months. So the depreciation will be 1,50,000 into 10%, which was our 15,000, right? So our balance CD on December 31st will be by balance CD. For that we are required first of all to total on both the side and write down the maximum amount, which was our 1,50,000 and 1,42,000. 1,42,500. 1,42,500, and the difference is your rupees 1,27,500, which will be transferred to the first date of the next year, which will be your 2017 January 1st to balance BD rupees 1,27,500. Okay, and on 2017 your January 1st, December 31st, your entry will be by depreciation 15,000 and December 31st by balance CD. And for that you are required again to total your 1,27,500, 1,27,500, and the difference is your 1,12,500, which will be transferred to the next year with the amount to balance BD on 2018 January 1st. 1,12,500. So friends, as if in this question we were required to find out, we are required to make the depreciation account for 3 months only, right? So this was all about the depreciation we have here calculated for 3 months, in which our first year depreciation is 7,500, next one is 15,000, and again it is your 15,000. We are required to mark this here because while preparing our depreciation account, as if in this question we were asked to prepare the depreciation account. So while preparing the depreciation account, we are required to show this depreciation over there. Okay. So now let us make the depreciation account. Okay friends, so here I have made the format of depreciation account, which was just same as if we have prepared machinery account, but here just the heading will be changed. So now let us start posting into the depreciation account, as if we have posted while preparing the machinery account, we have posted depreciation to the credit side, right? So while preparing depreciation account, the entry will be posted to the debit side. So to machinery account, because we have posted depreciation to the machinery account on which date? 2015 year first date is your 31st December, because depreciation was charged on the 31st December. Amount to rupees 7,500, right? In our first year it was 7,500. Again here 2015 December 31st. Here, your being a depreciation account, here your balance is to be transferred, balance is to be settled by the P&L, that is your profit and loss account. So the total will be 7,500 and transferred to the credit side. Okay, there is no such transfer to the next year. It will be now again after that coming towards the second year 2016 December 31st to machinery, and in the second year depreciation was rupees 15,000, right? So 2016 December 31st by P&L account rupees 15,000, 15,000 and 15,000. Okay, now again third year's depreciation December 31st to machinery 15,000, right? For the third year it was also 15,000 and the total is also 15,000, and 2017 December 31st by P&L account 15,000 and again 15,000. Okay. Yes, while preparing the machinery account, we had also transferred the balance to 2018, but as if we haven't, basically here we were required to compute the depreciation, right? So it is not necessary to write down in the depreciation account for the next year, because we are not asked to calculate the depreciation of 2018. So friends, this is all about the simple question of straight line method, where we have discussed how to compute the rate of the depreciation as well as how to prepare the machinery account and the depreciation account. Okay, so till here, hope you guys are clear with the concept. For further classes, please download our app Scholars Learning, and in case you have already downloaded our app, hope we are able to make your concepts clear and make your learning easy as well. Thank you.